It's so annoying, guys, when you do that. There's no sound. Turn your microphone on. Sound's not working. Something's wrong with the stream. There's no sound. The sound is so broken, like, it's so broken that I can't even read the message on the screen that says we're not starting it. That's how broken the sound is. All right. All right, everything's going to the moon, so just go all in. Make sure to join the group and buy the 6-month option so you can give me as much of your money as possible. Maybe I'll do like a lifetime option. I want all of your money. I like money a lot. I like your money a lot. I want your money to become my money. So just do that. I can scam you. We'll do a little exit scam action, and we'll be good to go. All right, thanks for stopping by. It was a good stream. I appreciate it. I'll catch you next time. Okay, I'm back. Okay, so normally live streams are only for the premium group, not even the basic group. It's one of the ways I use my magic Jew powers to manipulate people into getting the premium group. The premium group, the reason why I lock it down and I don't allow people to sign up certain times is when it gets really full. For those who don't know and aren't familiar, my premium members, they can DM me and say, hey, I have some questions, and I'll say, all right, later today we'll figure out a time. We'll get on the phone and chat for a bit. I'm available by phone, DM, whatever. I'm 100% dedicated to you guys and fully available, whatever you need. I try to do everything I can. They're like my family, and I love my members and do whatever I can for them, and it requires a lot of time on my part. The reason I said if people are standoffish about groups, join my stream, and that'll alleviate those concerns, and you'll probably want to join because you'll see there's really no group that does what we do, because I also work with Vamp and the Cryptomist. They don't do the sort of stuff I do with the educational work and one-on-one stuff, but we all have our specialties, and that just happens to be one of the things that I focus my time on. But it does require a lot of time. It's a full-time gig for me. My other revenue streams and businesses I've more or less shut down. I do really high-end IT consulting for VIP clients, the top 0.1%, and I'm not taking on new clients. I just work with my old existing clients. So most of my time is dedicated to this. It's a 9-to-5 full-time job, so I love doing it, and it takes a lot of time, and that's why I limit the premium group. It's more exclusive, and I don't have to divide my time as much over so many people. So that's a big difference in Flux Trading Group compared to what you would see in another group. I love to do this stuff, and I wanted to do a public stream just to show you guys, what sort of stuff we do in the streams. And there's so many trades going on right now, and it's kind of an important period. There's a lot of money to be made right now based on the trades I just got into. They're all breaking up, and I'm going to show you why in a minute. I'm also going to show you how they might actually fail, and it's always important that you're prepared for that eventuality. You want to be prepared to win. You want to be prepared to lose, because you want to limit and mitigate your losses by using strong risk management skills, and you want to optimize the benefits of a big breakout if you end up winning by utilizing those skills as well. So let's get into it. I'm going to show you a couple different things I'm watching right now. I want to give you an idea of why I got into the trades I got into. For people who are newer that aren't familiar with my work, I'll give you a very, very brief introduction into my different models and how I trade. So just to show you, because it's kind of time sensitive, right? I was talking about this trend line resistance, and we have this pennant, and it's actually more of a bull flag on Ethereum. But there's, in the same area, we were coming up against this resistance on the trend line here. At the same time, we're also coming up against a strong Ichima dynamic resistance at the top of the cloud on BTC. If the top of the cloud holds here as resistance and we can't break above it, we're going to retrace a little bit, and all of my trades are going to come back down. I'm going to lose all of my profit back. I don't think I'm going to get stopped out, because most likely we'll see a shorter term dip, and I'll explain why in a minute. But hopefully we can actually break up and push up here. So my open trades right now, I got Neo. You can see after I shared it with the group, when I share my trades, the second I get in, I make a chart and share it with the group. So Neo is already up. Ethereum already up. We're poking above that trend line resistance right now. XTZ, I originally went up, came back down, and now we're pushing up again. ETC is pushing up very nicely. It's up about 2.15% from my entry. So ETC is looking good. This was a very strong resistance at 515, so I'm happy to see that finally broke. I don't have an open trade on BTC right now. I got stopped out on the last couple trades I made on BTC, so I decided to make a move on Ethereum and some of the other things. But again, the top of the cloud, that's one of my Ichima dynamic resistances. For those who don't know, my Ichima model, there's 5 dynamic support and resistance levels. 3 EMAs, there's the 99, the 55, the 222 EMAs, then the top and the bottom of the cloud. There's other aspects to the Ichima model, but for now, I'm just going to focus on those 5 dynamic supports, meaning they're dynamic as opposed to static. They move around, right? So instead of a horizontal support like this at 6,900, that's a static horizontal support. Dynamics move up along with the price action. So as the price goes up, these EMA lines, the yellow one, the red one, and the blue one, will move up along with the price action or down with the price action, making them a dynamic support and resistance. So with the top of the cloud being one of those dynamic resistances, you can see we're getting rejected right now. We got rejected last night, and then we finally broke through, which stopped me out of a short. Much like last night, normally I would say, all right, I would get into a short right here because we're getting rejected from the top of the cloud. Sometimes it'll then break out, and that's what I'm hoping for here. Because if it doesn't break out, again, all those profits on all the trades I just showed you, I'm going to be giving that profit right back. Cody, I was already in, up nicely. Now I got in and doubled down with another buy. And then with Algo, same thing. I was already up. We had a 10% breakout on Algo. And then we dipped, sat right on top of this horizontal support right there. So I got back in this morning. Right after I got back in right here, we immediately broke up. And now we're up nicely on that second Algo entry as well. And I'm not in any of these other trades anymore. I got stopped out of some other ones that I had. So the importance of these resistances, right? The top trendline resistance here, and on Bitcoin, the top of the cloud. So the other main aspect of my modeling, what I do is I use my Stoch model in addition to my Ichima model. And with my settings, I use the stochastic indicator, and I look at these Stoch waves from the bottom to the top of the wave and back to the bottom is one full cycle. And you can see it's a really great indicator because it gives you an extra edge in identifying reversals. So we had the bottom out on the Stoch right here. That was the bottom before a reversal, and we came up. We maxed out on the Stoch right there. We were overbought on the stochastic, and that triggered a retrace. Then we came back down, and then at the bottom down here, we bottomed out right there on the Stoch, and then we've been pushing up since. So until that stochastic gets back up to overbought territory, we can continue moving up. The issue is when you look down at the lower time frames, at the 15-minute and the 5-minute, we're really high on the 15-minute. We've been riding that for a while, and the 5-minute went up and then slightly came back down. However, this is a really bullish indication when you look like you're going to retrace, but you end up making another push up. Like right here, on the 5-minute, the Stoch was maxed out, and sure enough, that triggered a retrace. We came back down, Stoch bottomed out right here, right there, and then we've been pushing up ever since. Then this time we maxed out, but we didn't really get a bigger dip. All we got was this tiny little dip right here, right? So when you get a really small dip like that and it stops going down and it immediately reverses early, that's usually a very bullish sign. So that's a good sign, and I'm happy to see that. But if I'm looking at the hourly and the 4-hour, the hourly is still bullish, right? There's a lot of room to go up. And the 4-hour is extremely bullish on these. Ethereum, not as much as some of the others. If I pull up the 4-hour chart for NEO, for instance, that's much lower. You can see there's a lot of room, and we can see an extended run there. Same thing with BTC, XTZ. We just started the reversal on the 4-hour. So that means, in theory, we can get a nice run on the 4-hour for, we can get 15, 20% out of something like XTZ on this one 4-hour cycle. Doesn't always happen like that, but if you look at the past instances, right, where we bottomed out, so from bottom to top of the Stoch, from right here to right here, was a 12% move, right? This one right here, we bottomed out down here. There's the bottom. That's the trough. From the bottom of the trough up to the top of that move would be right about there. That was a 15% run. And you look at like this one, for instance, right? Bottom, the trough of the wave down there to the crest of the wave up here would have been 20%. So you can get much bigger moves on one single Stoch cycle on the 4-hour. When you're looking at the exact same model, the Stoch model, and you're looking at those Stoch cycles on the hourly, you get smaller moves. So from here to the top could be something like this, and that's only going to be 5%. This one right here, a little bit bigger, right? So from the bottom right here to the top, which is right here, but then we continued upward. That was where we totally maxed out, was a 7% move. And when you do the same thing and you go down to the 15-minute, you're looking at 3, 4, 5% moves. And then you go down to the 5-minute chart, and one of those Stoch cycles is going to give you a 1, 2, or 3% move, and so on. So since the 4-hour looks really bullish with the Stoch model and the hourly still looks bullish with the Stoch model, we could very easily get a nice run here for 10, 15% on a lot of these coins. So I'm very confident about the positions I have right now. However, we do need to break through that major resistance, because if we get rejected from the top of the cloud on BTC, and if we don't break and close above that trend line resistance on that flag here. We're just kind of above there. There's 3 minutes left in this candle, so it's really important how this candle closes. If this candle closes above that trend line resistance, it's not a guarantee, but there's a good chance, about an 85% chance, that we stay above it. We're probably going to come back down, maybe test that trend line support, since it's going to go from a trend line resistance to a trend line support. We'll go up like that, come back down, test it, and then bounce off it again. And that's a good opportunity to bleed off some of that momentum from the lower time frame. So the stochastic model shows you momentum and a reversal in momentum. So we had a nice move up, our momentum maxed out, and then we come back down. And this again was really bullish, where we barely got a dip at all. But we were really maxed out, but we barely dipped. That's always a very bullish indicator. And sure enough, we moved sideways before breaking out again. So when you do have that, when you have those Stoke scenarios where the wave terminates early and gives you an early reversal and reversal in momentum, that's a very bullish sign. So we're seeing that a little bit here on the lower time frames. But if we can push up here and we can get up to like 145 or so on Ethereum, then we'll be able to get that retrace, come back down for 3, 4, 5%, test that trend line support and bounce again, and that'll give us a chance to bleed off that momentum from the 15-minute. Because if we can push up to 145 and then come back down to like 143 before a big bounce again, that'll give the 15-minute a chance to reset and have that momentum bleed off, get back down to that oversold territory, and then we'd be able to push up again from there. So the stochastic's a really helpful tool. It's not a guaranteed thing. I did a detailed live stream with the group yesterday, and I remind everybody on the team, you don't want to say, oh, well, we're bottomed out and we're oversold on the stochastic, so I'm going to go all in right here because it means we're going to get a huge bounce. That's not always the case. There are a lot of other variables that I consider. My model is rather expansive, and I consider a lot of other variables. I look for horizontal supports. I look at Fibonacci retracements for support. I use my EHMI dynamics to identify potential reversals. I'm going to look for bullish or bearish divergence on the RSI. I'm going to look for oversold or overbought regions on RSI. I'm going to look at trends on the volume. So there's a lot of stuff I'm doing at the same time. That Stoke model just happens to be an amazing tool that gives you that final confirmation you need, where everything looks like I want to get into this trade here. I really want to get into the trade. We're coming up against a trend line resistance, so I'm not sure if we're going to have enough momentum to push through. Well, in that case, I can just check the Stoke, right? And if the Stoke is low and it's showing me that we might have enough momentum to keep pushing up because there's plenty of room to go, that's going to be a confirmation that I can get into that trade and have some confidence that we'll break the resistance. So it's a great tool to use, even though it's not good to use solely by itself with nothing else. You need to use more than that when you're trying to develop a trading strategy. You don't want to focus on one single indicator. Let's see, we got 18 seconds for this to close. Let's see if we close above that trend line resistance. And I want to keep an eye on BTC, see if we're able to push up above the top of the cloud. The fact that we still haven't is making me a little nervous. So while we're waiting for that to come down, 3 seconds. So now we're going to get another candle. Let's see. If we push up right now, we can get through, but we might get rejected. The top of the cloud is a strong EHMI dynamic resistance. So let's see. You can see them fighting. You can see the bears trying to push us down. The bulls are propping us up. Come on. Now, also, a retrace is fine. So if we're bullish, we get scenarios where you'll break a resistance, and then you have to come back a little bit. And if you do come back a little bit, as long as you're coming down less than you went up, that's going to be a bullish trend. That's an uptrend, right? So if you go up $10 and come down $6 and go up $10 and down $6, there's nothing wrong with those little dips, those constant little $6 dips, as long as the moves up, those little $10 pumps are larger than the $6 dips. As long as that's happening, every time you get one of those ups and downs, each one of those cycles up and down is going to be 10 up, 6 down, 10 up, 6 down, 10 up, 6 down, which means every cycle you're going up $4. So overall, you're going to have a strong bullish uptrend. And that's what we're hoping for here. So even if we do retrace a bit, as long as we don't come all the way back down to the beginning of this latest run, that's fine. We can come back down to the top of the cloud and bounce off of that EHMI dynamic support. We can come down to the 55 EMA, which is another strong EHMI dynamic support. So there are a lot of supports there that we can potentially use if we get that retrace. But hopefully we can push up. If we can push up to 145, 146 on Ethereum here, we're pretty much in the clear. That means that if we do dump, we're definitely not going to dump all the way back down to the beginning of this bull run, right? Like in this case, we moved up and then we had this dump and then moved up again, but the dump didn't erase this entire move up, right? It came back down to, maybe 62% of it, to like a 618, maybe even 786 retracement, but it's not like we lost the whole move up. Same thing here. If we come down a little bit, I'm fine with it as long as we don't lose all that bullish momentum that we built on that move up. So yeah, let's see what happens. Right now we're kind of holding stable. Looks like BTC is probably going to be doing the same thing, holding stable right at the top of the cloud up there. So let's take a quick look at the other trades I have open just so I can cover everything, and then I can take some questions. Let me set an alert, because if we do come back down and test this support at like 67.50, I want to know so I can hop back over and keep an eye on it. We're pushing down. I'm really hoping the bulls can prop us up here and get us through the top of the cloud. If they can't and we come back down and bounce, it might take another 2 or 3 candles before we can push above the top of the cloud. So I'm hoping that we can do it. I also see a little bit of a trend line forming here, so I'm going to dive down so I can get some extra candles, the 15-minute, because you can see more data that way, just so I can draw this trend line, and that'll give us an idea of another potential support on the way down. There you go. So I just spotted that trend line with the naked eye. Now I drew it out, and now I'll be able to use that to see if it's a potential support, which is good now, actually, because you can see on the 15-minute, you have the EMAs right here and the bottom of the cloud clustered together, right where there's also a 6740 horizontal support. This support has been more of a minor support. It's been broken a bunch, but again, on the 15-minute chart, you might see more candles breaking that support, but it's still pretty valid if you zoom out to the hourly. So it's still a minor support here, but there's enough going on in this area. There's a really good chance that we could hold here and bounce if we retrace back to this region. So let me just run through the rest of my trades. So just like the others, we got Neo slightly retracing, and again, right, so this is the 15-minute Stoke was overbought. So since we're overbought on the 15-minute Stoke, that tells me we might get this short-term dip. So let's just say we get like 3 or 4 bearish candles, right? And that allows the Stoke to bleed off and come back down to 25, 35, 40, even not all the way down to the bottom, just down to those regions right there. That might be all we need. Once we come back down and we can bleed off some of that bullish momentum, we can get rid of that, go bearish just for 3, 4, 5 candles, then we can get another reversal and push up again. So that's what I'm hoping for. Since we have plenty of time, this is going to be 2 or 3 more hourly candles before we would see a reversal. So on the lower time frames, we have some time to play around a bit. So here you could see the 5-minute also perfectly corresponds, right? So we maxed out on that 5-minute, and now we're coming down. This is going to reverse relatively soon. This is only 2 or 3 more 5-minute candles. So as long as these bearish candles here aren't that big, as long as these dips down don't push us down past like maybe $7.03-4 on Neo, as long as we can hold around that level and this bottoms out, then we'll get a reversal and then we can bounce and start pushing back up. So I'm hoping that'll happen with the 15-minute as well. Get back down maybe to where the EMAs in the bottom of the cloud are. We have to see. Using multiple time frames is a really helpful tool, because even if you see that on the hourly and the 4-hour you're really bullish, just because the 4-hour is really bullish on the Stoke doesn't mean you're just going to keep going up without coming down. That means that most likely, and it's not a sure thing, but we deal with probabilities, right? The probabilities in our favor that we're going to get a bullish move up based on the 4-hour chart. Chances are it's going to be a larger bullish move up that might take us all the way to $7.50. But during that run from here to $7.50, there are going to be a dozen moves up and down that you might not see on the 4-hour candles, but if you zoom down to the hourly or the 15-minute candles, then you'll see all these rapid ups and downs, right? So that's what I'm keeping an eye on. We need that stochastic to come back down. And one of the other ways you can use stochastic, the stochastic model, again, you're not going to use it as the only thing you're looking at. It's not going to have you go and get into trades or exit trades. But one of the things I do, I'm sure you guys have noticed, sometimes I share trades with like a surgical, precise entry, like incredibly precise entry. Look at Cody, for instance. So I had shared this Cody setup, right? Where, whoops, this one. So we were about up here. Let me go back to the hourly, because that's where we were when I actually shared this trade on Cody. And let me show you what you can do with that Stoke model. Hold on. Let me go to Darth Crypto, short-term trades. Here we go. Cody. Here we go. So I said to the group, I shared this chart, and I said, I need Cody to come down a bit more to fill my buys. So what I had identified was we had each of my dynamic support right at that 55 EMA. So I figured we're going to come back down and retest very close to that 55 EMA. And looking at the different time frames on the stochastic model, I knew that before we actually pushed up on this hourly bullish trend, I knew we had to come back down again most likely. So I identified the ideal entry based on looking at the lower time frames. I very easily could have bought in right at the current price and said we're bullish on the hourly, so we're going to go up, but that doesn't take into account the short-term dip before we go up based on the hourly. So I was able to identify this as my potential entry right at 1947, and then sure enough, it ended up filling on that wick right there, right? So that was a perfect surgical entry. This first wick there, and then the next candle had a wick in that same area. That was able to fill my orders right above the 55 EMA, just as I predicted, and that's incredible. I mean, that's a very surgically precise entry. That is, I got in 0.6, actually it's probably less than that, from my entry to the bottom of that candle right there. Yeah, 0.55% above the bottom was my entry. So that wick went down 0.55% below my entry. I pretty much got in at the exact bottom, right? And the way I was able to do that, even though we had that bullish indication based on the hourly chart, I went down and looked at the 15-minute or the 5-minute chart, and I was able to see those were still really high, so we still had to come back down a bit, right? So when we were over here, let's look at the 15-minute. So we were up around this area when I said I want to come back down lower and potentially get that lower entry. I noticed that we just started the reversal on the stochastic, so I knew we still had to come back down and reset that stoke wave. And sure enough, the bottom of that stoke wave ended up putting us right where I had my buy order. So even though the 1 hour chart looked bullish, and I could have entered based off of purely that, I looked at the lower time frame, and I was able to refine my strategy and get that perfect, precise entry. I was able to narrow it down to this tiny, tiny little range because I knew before we broke up on that hourly bullish trajectory, we would first come back down based on the 5-minute and the 15-minute stochastic that were still high and still needed to get that reversal in momentum before we can get the bullish move up. So hopefully that makes sense to everybody. Using multiple time frames like that is an incredibly valuable tool, especially on a model like what I've come up with the Stoke model. Wow, we're retracing hard here. Uh-oh, let's see. Oh, Cody is. So Cody is dipping back kind of hard. Let's see, Algo is still holding very nicely. BTC. All right, it looks like maybe it's just Cody that's coming back. Everything else looks like it's holding because look, we're actually pushing up. This is a very good sign, so we're pushing up on BTC. We need to get above the top of the cloud, guys. If we can just get above the top of the cloud, I will pop wood. I'll be so happy. Yeah, ETC still looks really good, and Ethereum is still pushing up. So I'm actually doing well. Cody is my only trade that's wavering right now and coming back down a bit. Which brings me to one other point. Now, I like to joke around. I'm not really arrogant. I don't think I'm God. I know that my model and I know that my skills are pretty refined, and I'm very good at what I do, and I'm very proud of the hard work I had to put in to get here. But obviously, I don't think I'm always right. I'm wrong all the time. And when I am wrong, I actually enjoy it because it gives me an opportunity not only to learn myself, but to teach the guys in the group. Like, I was wrong about this trade. This is why I was wrong. This is what I fucked up on. And this is how we can all use that information in the future to avoid making those same mistakes. So being wrong is not a bad thing. I'm not always right, and I don't mind being wrong. I actually like being wrong because of those benefits. But what I want to illustrate is with my trading style, sometimes like people will troll me on Twitter and be like, oh, this tweet didn't age well, because I had a tweet that was like, oh, I think we're going to break up here. And it's like, why are you trolling me because I was wrong on one trade? First of all, it's pretty rare that I'm wrong anyway, but it's not a bad thing to be wrong. I don't delete tweets. I've never deleted a single tweet. I've been doing this for 3 years now. Never deleted one single tweet. Not about any trades, at least. I have deleted, jokes that would have got me suspended from Twitter because we had way too many snowflakes on the platform, but definitely never deleted any trades or anything like that. But with the way that I trade, it's important to know, since I focus so much on risk management, since I'm really good at identifying those surgically precise entries where I get in within, under 1% of the bottom, I'm able to set my stop loss really close to my entry. So my stop loss might be 1.6% below my entry. So that means on a huge, I could have $100,000 trade, and the most I could lose is $1,600. On a $10,000 trade, the most I could lose is $160, right? So I limit my losses. So when I do take a loss on a trade, it's very small. It's virtually an insignificant amount of money based on how much I'm trading. That means a $1,000 trade. If you just made $1,000 trades all day, this would be a $16 loss, right? Everybody can afford to lose $16 a few times a day. So if you're wrong on a few trades, that's fine as long as you're overall making money. So since I'm really good at identifying those surgical entries that get big breakouts, that means that I could be wrong on 4 or 5, 6 trades out of 10. And obviously, I'm not wrong 60% of the time. I'm right a lot more often than that, but even if I was wrong on like 6 or 7 times out of 10, I would still make money, because on those losses, I'm only losing 1.5%, 0.5%, 0.75%, 2% sometimes. And occasionally on certain trades, I'll go up to the high 2s, maybe 3%, but that's pretty rare. But by doing that, by mitigating my risk so well, I limit those losses so they're so small and insignificant, and my big breakout calls that make me 5, 10, 15, 20, 25, 30% profit cover those losses. So if I lose 7 out of 10 trades and I lose 2% on each one, that doesn't really matter, because I made 5, 10, or 15% on the 3 trades that did break out. So don't worry about always being right. You have to worry about focusing on risk mitigation and risk analysis. If you can get your risk management skills honed in and mitigate your losses so they're not really significant, you'll be able to trade successfully even without a perfect strike rate. So that's an important aspect of my trading strategy that everybody should be aware of. Okay, well, now we know what we're looking for, right? I showed you all of my open trades. I got, again, this Neo trade is looking good. I'll probably move these trades up to risk-free relatively soon. We just started the new hourly candle. There's still a chance we're going to come back down. I don't want to get stopped out prematurely, so I'm going to leave this open. I'll probably move my stop loss up to my entry, and that'll make my trade 100% risk-free. I can't lose $1, because if it does collapse, I'd get stopped out right on my entry, so I would break even, right? I'll probably move my stop loss up to my entry on Neo once we break this resistance at 715. And then on Ethereum, there's a resistance up here, right around there. That's why I was saying 145, 146. If we break 146, I'll move my stop loss up to my entry and make my Ethereum trade risk-free. And so on and so on. I'll be able to do that with all of my trades. I just have to get above a little bit more resistance, and then I'll be free to do that. In this case, on XTZ, we got a good resistance right here. You can see these with the naked eye once you do this long enough, right? So I just spotted that with the naked eye, and then I added the line there. So rejection, 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 support, support, rejection. Resistance, right in the middle, support, 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 broke through. Resistance, resistance, rejection, resistance, all these 3 in a row giving us a really hard resistance. This is an hourly candle too, so there might be several candles, 50-minute candles within that 1 hourly candle. So there are a lot of supports and rejections right off of that level. I spotted that with the naked eye, and now I added the line there so everybody else can see it. If we break that at 171, 172, and we can get above there and close above there on the next 2 or 3 candles, then I can move my stop loss up to my entry price. Then I'm going to have this, what became, it's a resistance now, but once we get above it, it becomes a support. I'll have that support to protect my stop loss, plus the top of the cloud and the 55 EMA, because by the time we get up above there, the 55 EMA will probably be just above my entry price over here. So I'll have plenty of support to protect my stop loss. And then on ETC, I can move my stop loss up to my entry, make this a risk-free trade. I could actually do that right now. I'm going to hold off a little longer. I'm only risking 1.35%. It's a relatively low-risk trade. Realistically, I probably should have set my stop loss a little lower at about 1.5%, just so I would have the extra added protection of having that 222 EMA above my stop loss. So if it did dip, that 222 EMA is a really, really strong one. When you get those big dumps, the 222 is usually the one that catches it. You can see the 99 EMA caught all these dips down, right? So if we were to dip down, hopefully I would have the 99 EMA protect my stop loss again, just like it did here. But I'm not going to move it up yet. I'll wait a little bit longer. There's a resistance right here, so maybe if it gets above 524, then I'll move up my stop loss. Again, you can kind of spot it with the naked eye, right? You get all these candles getting rejections, even right here, a lot of rejections from that same area. Then you could usually follow it back and find, yep, look, so it was also a strong resistance right there. Look at this, that big candle. If you can see, there's actually a really strong wick right here, right, that got rejected, right there, that got rejected. So once you find a good support resistance, you can follow it back, and that's why I never delete this stuff off my chart. A lot of these support resistance levels have been on my chart for 3 months, 5 months, 6 months, 12 months. I don't delete them because in the future they can be extremely valuable to have. Like right here on this dip down, if I spotted this live, if I was watching and it bounced right off the 222 EMA, that's one of our Ichima dynamics, right? 222 EMA is a really strong Ichima dynamic support. I also had this support from way back, probably months ago. Most people wouldn't have a 6-month-old support on the chart. So I might enter a trade here with my stop loss just below that support. And everybody else on Twitter is like, why are you entering there? I don't see any support. Well, you guys don't have charts that have 6-month-old supports. I do. So it gives you an edge over other people to have that data. Because if you have a really strong support resistance, like right here at 523, if this price comes back down to this same region in 6 months from now, I'm still going to have this line on this chart, and I'm going to have so much of an edge over everybody else because no one else is going to know that there's actually a really strong support in that area from months ago. But a lot of the time you'll do that. You'll spot a good resistance here. You set a line right there just to mark that resistance. Then you go back in time and you notice that sure enough, it was also a resistance way back. So again, if we get up above the next resistance on this one, I'll move my stop loss up and make ETC risk-free. I'm at the point here where I could probably do that on this one too, since we have the top of the cloud, the support at 515, the top of the cloud, the 55 EMA are all above where my entry was. So if I set my stop loss to my entry here, that'll be a pretty good setup. So we got rejected from the top of the cloud again on... we started to poke through the top of the cloud, but then we got rejected on BTC. But we still have this trend line that hopefully is going to hold. So, all right, I'll take some questions because there's really nothing else I could show you now. We're just at the mercy of the chart. We have to wait for this to play out. If you look at the 15-minute, we're not coming down. We really need to get a little bit of a reset on the stochastic. I want to get it back down to at least 50. If it can get down to 50, we can get an early reversal and turn back up because we look relatively bullish right now. But I really, really want to just get that reset. The 5 minutes coming down, but the 15-minute really needs to come down a bit. And again, the hourly is really bullish and the 4 hour is really bullish. That just crossed over. So I'm loving this setup longer term. I just hope this little 15-minute dip doesn't stop me out of my trades. If it does, I'll probably have to buy back in. I just got to time it right. So if I get stopped out of my open trades, most likely, given how bullish the 4 hour and the hourly charts are, I'll probably want to get back in. I'm just going to use the lower time frames to try to identify the lowest bottom I could possibly identify so I can get the best possible entry. All right, anybody have any questions about everything we just covered? Let me go through the chat really quick and just catch up and see if there were any questions in there. Well, if it breaks, so the top of the cloud is a support and a resistance. So in the case of Cody, the top of the cloud right here is a support. Now, there's a wick that came down through it, but mostly it's riding along the top of the cloud. It may fail eventually. Usually when you're riding just along a support for a long time, if you have a horizontal support and you're riding along that support for 5 hours, eventually that support may fail or you're going to get a bounce and push off of it. You're not going to ride that support indefinitely. So we're riding along the top of the cloud now. We're either going to bounce and push up or we're going to have that support fail and we're going to fall into the cloud. But if you're coming from the bottom and you break through the top of the cloud, you're breaking through a resistance. That doesn't necessarily mean you're going to run right away. You might just ride along that top of that support for a while. But yeah, you're breaking through one resistance, which means you don't have to worry about getting rejected until you hit the next resistance. Sometimes there are hidden resistances that you can't see. So, like, let me show you an example. On Cody right here, We got a horizontal resistance I can see right now, right there, right? So there's a horizontal resistance. So from here, that would be the next stop. Sometimes you get like invisible resistances that you can't really see. Now, in this case, I don't really see one. But let's assume we didn't have that horizontal resistance there. You can still identify trend lines and say, all right, well, that was actually a resistance that you didn't see, right? So there's a trend line going there. So even if we didn't have that horizontal at 2106, we would still have a trend line resistance here. So identifying as much as you possibly can as far as support and resistance on the chart will give you an idea of where you might get a rejection or a reversal moving forward. And that's a good way where you can combine multiple techniques or multiple indicators, right? You can use support and resistance to anticipate when you're going to get a reversal, but what else can you use? You can use the stochastic model, right? So let's say you're coming up against this yellow line, you're approaching that resistance, and you have your 5-minute, 15-minute, and hourly stochastics are all totally maxed out and overbought, and they're all at 80, 85, right? Chances are you're definitely going to get a hard rejection from that resistance. But if you're coming up on that resistance and every one of your oscillators, all your RSI is low, your stochastic is low, you might actually push through that resistance. So using two different indicators simultaneously is a really helpful tool. Only question I have for you guys, and then I'll take your questions, is who the fuck put a thumbs down on this stream? Seriously, it's so rude. It's rude. If you have a problem and you don't like my live stream, tell me what it is and ask me. Don't give me a thumbs down, fucking dick. I'm always losing those SRs on TV, locking them into place. Click the cloud button, a few days later, boom, it's gone. How do you keep them? So with TradingView, especially if you have a paid account, you could have multiple layouts, right? So right now this is watch list, whatever I named it. I can make a copy of it, I can load, or I can do a different one. So these are just a bunch of different layouts I have. So under this one layout, watch list USDT alts is just the name I gave it. If I set support and resistance on this Cody chart and I save it, it's going to be there. I can open up my phone, another computer, my main computer, my server. I can open up any device that I want if I go to a browser or if I open up the app and I'm logged into my account and I open this watch list and it was saved. Mine is set on autosave, so every 2 minutes it's automatically saving it anyway. If you don't have it set to autosave, you have to manually click like this. Let me show you. Since I changed something, I would have to manually click where that arrow is now. If I click on that, it's going to save it. Now it's saved. You're not going to lose it. So you're probably doing something where you're looking at a different layout. Because right now, with this one layout, everything is here, and it's not going anywhere. The only way that I'm going to come back here and not have these supports anymore is if I open up my computer and I open a different layout, and instead of having this watch list one, I accidentally load one of these other chart layouts I have, which have their own individual charts and everything, right? The other possibility is if you have multiple tabs open, like this is another tab I have open with charts, but this is a different layout. This is the new BTC layout, and this is watchlist USDT alts layout. So if I use watchlist USDT alts layout, if I take this address and I copy it on 5 different tabs, if I open this tab and I add a bunch of stuff and save it, and then I go to the next tab where I'm using the watchlist USD, if this was the watchlist USDT one on this tab too, and then I add lines here and then I save it, on this tab, I didn't put anything on the Cody chart, right? I put this stuff on the Cody chart on this tab, so when I save it, anytime I go to the Cody chart, it's going to have that info. If I go to the next tab that's using the same layout and I make changes to my Ethereum chart and hit save, it's going to now save the changes I made to the Ethereum chart, but the Cody chart on this tab doesn't have the stuff I just added. You see what I'm saying? So I'm going to be overriding it by saving it again. So you only want to use one tab. I never use multiple tabs anymore. I have one tab with my watch list one going, and when I want to go to a different chart, I just click on it on here. I never have a separate tab with the same layout, and that's how you avoid overriding it and losing your stuff. The other thing is if I save all this stuff and then I open up my cell phone and I go to the TradingView app and I open up LTC and I make some changes, and then I save it on there, it could also overwrite what's going on here. So you get a pop-up on the screen that asks you if you'd like to reload or continue. If you ever get that, if you hit continue, you won't reload the page, so you'll still have your stuff there. But if you hit reload, it'll refresh it and show you whatever the last saved one was, and that way they're always in sync. I could do a video with the premium group and kind of break that down in more detail on how to manage your TradingView stuff, but I lost so much work over the last couple years. Eventually, I just had to figure it out and become a pro, and now I got this stuff down. I never lose anything on TradingView charts anymore. It's probably been 6 months, or not, if not more, since I've lost a single thing on a TradingView chart. Do you sometimes remove trend lines because they appear irrelevant? So sometimes if there's a trend line or a horizontal support that was like a minor support at one point, and since then it's just been completely irrelevant, then yes, I'll remove it. But usually that's not the case. Most of them on my charts are pretty good supports that are valid later on down the road. But even if I find one that is pretty irrelevant, that's just constantly getting broken nowadays, I'll leave it on the chart if it's not in the way. But if I'm working in this area, like look at my Bitcoin chart, for instance, right? If I'm working right in this region and I have all these fibs and I have all these horizontal lines, if I find some that aren't relevant anymore, I'll probably delete them. But I don't do it unless I have to, unless they're really in the way. There's also a way, which I haven't started doing yet, but one of the guys in the group showed me how to do it, where you can set it so it doesn't actually put the number over here on the price side for each line. So that way, if I do add a support, you can actually see it. Because right now, you don't know what's referring to what line because there's so much stuff there. So I'm going to have to clean that up. I just haven't done it yet, but I'm going to. It's on my to-do list. I haven't really looked at the Wyckoff distribution. I could take a look at it later, though. Oh, now I have 4 dislikes. You guys are such fucking dicks, man. It's just so rude. I know you think it's funny, but it's just rude. Because other people are maybe not going to look at the video if there's more dislikes, right? Oh, 5. Yeah, you're fucking hilarious. You guys are fucking hilarious. Great. Let's just call the stream done then, because unappreciative cocksuckers apparently don't care about the hard work I put in when I'm trying to help you when it doesn't benefit me at all. Selfish fucking pricks. Anybody have any other questions? Getting rejected here still. We're holding relatively well. We're not coming down that hard, which is it's a pretty good sign. But we're also not seeing... Oh, we're actually getting a nice reset on the 5-minute Stoch, which is nice. Yeah, that's always really great. Here, check this out. So you see how these are tiny little dojis, right? And they're really not pushing down at all. That's a great sign. That's really bullish because a doji is usually a bullish sign. Well, in certain cases it is. It's a reversal indicator. So we're coming down. That means we're reversing to go up. If it's at the top, it can be a bearish indicator, meaning we're going to reverse and come down. But when you have those, right, when I have a high Stoch or a high RSI and I'm expecting to have it bleed off a bit and I need it to come down, you could see some bearish divergence here too, right, on the 5-minute Stoch or on the 5-minute RSI. Some mild bearish divergence right there. So that goes in line with what I was saying, right, about how we're going to see the Stoch dip down because we need to see the Stoch come down when we're overbought. So the bearish divergence just kind of gives us some confluence to match up with that. But the fact that we are not dumping, but we're just kind of moving sideways with slightly red candles, but we're still bleeding off that momentum and resetting the Stoch is a great sign. It's a really bullish sign. And the fact that we have this trend line support here is also really great. So I'm pretty confident we're going to hold here. And hopefully the next candle we can make a push up through the top of the cloud on the hourly. Let's go back to the hourly and you'll see Hopefully we can close out this candle in a half an hour without getting below this trend line support. If so, the next candle could probably push through the cloud, especially since it's coming down like this. We might have a good opportunity to break through the side of it, but I really need this trend line support to hold. If this trend line support here fails, it's not crisis mode. It's not like we're going to tank or anything, but if we do fail to hold right here, I'll be a little less confident. But I'll still overall be confident given the hourly and the 4-hour bullish sentiment that I have based on the Stoke model. All right, were there any other questions? Because I hear the kids crying upstairs. They just got up from their nap. So, how long beforehand do you issue them and so on? What did you mean? Could you elaborate on your signals group and how it works? I don't really do signals. I share all of my own trades. Here, I'll just show you really quick. So I share all of my trades, but I'm very adamant about people not blindly following me or anybody else. I hate the idea of signals. I share all of my own trades. You can blindly copy them if you choose to, but I really don't want you to. I want you guys to look at this setup on Algo, or I want you to look at what I'm doing with Cody here and say, all right, based on what I know, based on the skills that I have now, do I think that this trade is right for me? Plus, you have to factor in your risk profile. Your risk tolerance is much different than mine. I can afford to risk 3% on this Cody entry because I'm pretty confident we're going to get one of those surgical entries and bounces. Sure enough, we did, because my Ichima dynamic support at the 55 EMA held so perfectly, and that dynamic support at the cloud was trending up, which meant as a leading indicator, we were probably going to push up to above the cloud. So I had a lot of confidence in this trade, but based on my own risk profile, I made a lot of money over the prior 24 hours because I was on fire. I was like 8 for 8 on trades, going short and long and short and long on BTC. So I can afford to take this loss, right? But if you can't afford to take a loss, if you're trying to make money to feed your family by trading and you can't afford to take a riskier trade, you're not going to want to get into this trade. That's why the whole idea of signals groups are so dangerous, and it's so stupid. Anybody who's giving you signals and telling you to blindly follow them is a cocksucking piece of shit who doesn't care if you go broke. Because it's a horrible, horrible thing to do, to give other people confidence that they're going to be able to make money on your trades when they have a radically different personal risk profile or risk tolerance than you do. It's extremely irresponsible. I don't approve of it, and I hope that everybody in the group is discouraged when I say things like this from blindly following me. If you're in the premium group and you don't understand how I'm doing what I'm doing, you shouldn't be trying to copy my trades because you don't have the knowledge and the skill to make it work for you. So what you need to do is take your capital out of the market, start paper trading, practicing with the different concepts that I teach. Talk to me. If you're in the premium group, we can hop on the phone and have a chat. We could talk about different strategies, what may or may not work for you, what you may or may not want to learn or need to learn. We can come up with a plan so you can educate yourself and learn how to do the stuff that you need to learn how to do to trade like me. And once you get there, and once you're paper trading and you're practicing and you're able to make regular profits without getting stopped out for huge losses, then you're ready to put your live capital back to play in the market. If you don't have the risk management skills, if you don't know how to set a nice tight stop loss that's always going to trigger and protect you from taking a big loss, you shouldn't be entering trades. So I don't like signals, but I share all of my trades. And if you're an experienced trader and you know what you're doing and you have the TA skills, you can look at my charts and decide if it's the right trade for you based on your personal risk tolerance, then you can go ahead and get in. That's totally fine. If that is what you're looking for, if you are one of those knowledgeable and experienced traders who knows exactly what I'm talking about and knows how to take advantage of this sort of stuff, you can look at the trades that I share and get in if you want. And in those cases, as soon as I enter a trade, I share the chart. Sometimes I get into a trade right as it's breaking out, and by the time I actually share it, by the time I make the chart after I enter, it already starts to go up a bit. In those cases, it's not good to FOMO in. It's usually better to wait for it to come back down slightly. I don't know why that didn't load. But this is that, right? So you could wait for it to come back down because that's at resistance right here anyway. And let me just pull up one more. Hold on. So in the case of I doubled down on my Cody play. That didn't break out right away. So some of the trades I get into, I will share when I get in. And they don't break out right away. I got into Link here. It eventually actually stopped out. But some of these trades, by the time I get in and share a chart, there's not a lot of time before it breaks out. Sometimes it doesn't break out for hours and hours. Like my Algo trade took 2 days before it actually broke out. So I had entered into Algo here and I had shared it. So if you had seen me share this, but you decided I'm actually going to wait because you're an experienced trader, right? So you might see this, and instead of blindly following me right when I enter, you can wait and get in when it gets back down and bounces right off of those Ichima dynamics, because look how well they worked, right? The 55 and the 222 showed us confluence. We got a strong bounce right there and came back up. You could have waited and entered right there, right on that horizontal support. You would have actually gotten a better entry than me, and then your stop loss only would have been 0.7% below your entry. It would have been a great low risk trade. So you would have been better off not blindly following me on the entry, but instead buying it a little bit lower. But that's how it works. I share my charts. It shows my rough entry and my rough stop loss. I don't put my exact entry and my exact stop loss on the charts I share for a couple of reasons. Most notably, when I buy, by the time I make the chart for you guys to share it with you, the price is usually a little different. So at that point, I don't put my exact entry on the chart because it wouldn't make much sense. Sometimes I put my entry at the right spot, but my stop loss I change because I don't want other people to compete with me with the exact same stop loss, because that might cause one of us not to get our orders filled. So my stop loss is never exactly what my actual stop loss is, but I use the long tool that shows the entry in the middle and the stop loss at the bottom with the target at the top. That said, I don't usually use the target. Sometimes I do, but more often than not, I don't spend that much time coming up with a really precise target, because what I like to do instead is move my stop loss up progressively. As the price goes up, I move my stop loss up to lock in more and more profits. And that way I don't have to worry about setting a target in advance. Look, we got that bounce and we're coming back up. This could be a good opportunity to push through the top of the cloud. Oh, we're still in that. There's still 20 minutes left. I was looking at the 15-minute. This is the hourly. So, all right, we'll see what plays out here. Let me just check if there were any other questions, and then I got to go. If you go back and watch this, it'll be available for playback later. He said, Mark said, how do you use indicators when multiple time frames contradict? The whole point is for them to contradict, because they're not really contradicting. If I'm looking at the hourly that says we're bullish, but the 15-minute says we're bearish, all that means is we're going to come back down and give me a little bit of a better entry based on the 15-minute chart. We're going to come down slightly. I can get a better entry and then ride the wave up for the hourly. I talked about it several times earlier, so go rewatch this stream later and you can see me elaborate on that more. Yeah, I use leverage and margin and stuff because I short on alts and majors. For the time frame stuff, add favorites. If you add, somebody said, how do you get that quick list up there? Just add favorites like this. So I have 5-minute, 15-minute, hourly, 4-hour, and daily marked as favorites. So they show up here so I don't have to go to the drop-down list. You could watch this back later. Somebody said you can't rewind it, but yeah, you could watch it back later. I'll make sure it's available for playback. For the Stoke, you should wait until the lines intersect, but you know what lines actually represent. No. Already passed. So the price will go down. I try to put my stop loss at an area where if the stop loss hits, that means it's going to keep going down. Sometimes I'm wrong. Sometimes I get stopped out and then it immediately bounces back up. It happens. Sometimes it happens. I don't get upset over it. If I get stopped out for a small loss and then it breaks out big, I'm a little annoyed. I'm like, shit, I kind of missed out, but I don't really let emotion get to me. I divorce myself of emotion, and that's one of the reasons I'm successful as a trader. If you get emotional, you're going to end up FOMOing into trades you shouldn't FOMO into, and you're going to take big losses. So it's important to be able to divorce yourself of that emotion. Discord link is not taking me to your server. I'm already signed into my Discord. It should. Somebody else can try it, but the Discord link that ends in RVP that's in the video description should bring you right into the welcome channel of the server. Try it again. If not, the same link is available on my Twitter bio, but if that one link isn't working for you, I don't know. All right, I think we're good to go. We'll call it a day for now, and I will update you guys when I make some changes or if I see anything on the charts that are worth noting. I already said that my charts more or less do show the exact price I entered. Not exact, but pretty close. That's the whole point, is the middle of the long tool here shows my entry price, but sometimes it's not my entry price if it moves, because if I were to enter a trade and it goes up 10%, and I share my trade with you guys and I show you, oh, that's where you could enter, well, it's 10% below the current price, so that does absolutely no good for anybody. So I'll say, okay, if you wanted to enter here, this is how I would trade it right here, even though I already got in a little early, you know? I briefly looked at the XTZ chart. I gotta go, but this is the XTZ chart. If we push up above the 172 resistance here and close above it, then I'll move my stop loss up to my entry and make it a risk-free trade. But I'm still bullish. I like this a lot. There's a little bit of an upward trend line here as well, so a lot to keep our eyes on. And it looks like there was a trend line, a topside resistance that is right there, so we would need to break through that resistance too. But again, everything else looks bullish on the hourly and the 4 hour. 4 hours got a nice solid turn up on the Stochc. We should be able to build up some momentum and keep pushing up here. The 15 minutes coming down on these now, which is great. Finally bleeding off some of that momentum. It's exactly what we need to see. And look, it's exactly what I said, right? Remember, guys, what did I say? On Ethereum, most likely we'll push up and come back down and retest that trend line. That's why when you break through that trend line resistance, you don't want to just buy in all the way up here necessarily, because usually you get a retest of that trend line. Did I not call that perfectly? I said we're going to break through the trend line, come back down, and retest it before we get another move up. So if you wanted to enter here, for instance, you could buy right here, set your stop loss only 0.4% below your entry. If you bought right here and your stop loss went, I would say just to be safe, put it below the 55 EMA. Well, this is the 5-minute chart, actually. Hold on. If I go back to the hourly, if you were to buy right here, ideal stop loss placement would probably be before that green candle, so 1% below your entry. That's relative. 1% is pretty low risk. You know, on a $1,000 trade, that means you would lose $10. That you would lose $10. So put $1,000 into Ethereum now. Set your stop loss right here at my entry, which is 142 and change. That means if you do get stopped out, you'll lose $10. It's pretty awesome, right? It's a pretty great trade. $1,000 trade, you lose $10, but if it goes up for a 10% run, you end up making $100. It's a pretty solid RR right there. It's one hell of a risk to reward ratio. Yeah, if you use discord.gg2NSYRVP in the video description, let me see. Hold on a second here. Let me just see. I'll generate a new one. Welcome to FTG. Create invite. I definitely have a working link in my Twitter bio. So let me add this in the text here in the chat. Is that the same one? 2NSYRVP. Yeah, it looks like the same link that's in... Oh, for some reason, the one that's in the video description isn't working. Oh, I think I see why. After the P, there's a colon, it looks like. Yeah, I must have accidentally typed a colon. That's why it's not working. Sorry about that. But if you copy and paste the Discord link that's in the video description, or just use the one that I put in the chat window, that one will work. So I'll just remove that colon where it says join, after the link there's a colon on the end of it. I'll just remove that, and then that link still works. Okay, all right, guys. Thanks for stopping by. If you want to rewatch this later, I'll make sure it's available for playback. Thanks again for stopping by. To the 3 people who gave me a thumbs down, I hope your intestines liquefy and fall out of your asshole. All right, take care, guys.